Hello and welcome. Today we have Marianne Labor, macro strategist at Deutsche Bank, who covers payments, digital currencies, and fintech, is going to talk about the future of digitizing cash. Welcome, Marianne.
Welcome, everyone. Thank you very much, Jack.
Here's the money flower, produced by the Bank of International Settlements, and which many people use. And you've got two aspects to this: demise of cash and the rise of digital currencies. Explain.
Here, it's a taxonomy of money, what we call the money flower. And the Bank of International Settlement defines money by four different dimensions. The issuer, so is the money issued by a central bank or private institution? How is the money accessible? Is it a wide access versus a restricted access? The third dimension is the support. Is it a digital support versus a physical support? So physical like for coins, banknotes. And how is the money transmitted? Is it a peer-to-peer transfer, like token-based, sometimes it's referred, or via an intermediary? And what we are seeing on this diagram, on one, you have cash here, and cash is issued by a central bank. It's not digital, but it's widely accessible, and it's a peer-to-peer anonymous transfer. While, for example, if we take the case of a central bank digital currency, so it's a digital currency issued by a central bank, but it's not peer-to-peer. Since it's digital, you have a footprint, and it's also widely accessible.
So what's happening to cash? Is it going to disappear?
That's a very good question. And actually, many people are wondering whether or not the COVID-19 will lead to the end of cash. And a short answer that I would give you is not at all. And for example, if we are moving to the next slide, here you can see that counterintuitively, cash is still growing. Cash in circulation has nearly doubled over the past 20 years, and it's mostly driven by large banknotes in circulation. So just to give you an example, a very recent one, during the 3 months prior to May 2020, the increase of banknotes in circulation in the Eurozone was 75 billion euros. And this is a new all-time high, and it exceeds the increase during the 3 months following the collapse of Lehman Brothers in late 2008. And this is due to the fact that people are withdrawing cash as it seems as a safe haven to store value, and especially during crises.
And that's been a phenomenon throughout the last 100 years. When things got dodgy in wars and so on, people took out lots of cash. But in terms of the population, they don't think cash is going to disappear, do they?
Actually, you would be surprised, but looking at consumers, you are absolutely right, and not at all. So at Deutsche Bank, we have conducted a survey. So we have surveyed more than 3,600 people, and more than 60% think that cash will always be around. And this is true for most of countries, as you can see on the right-hand chart. And this is true as well for all demographics, more for the older generation than the younger generation, but still most millennials think that cash will always be around.
But surely COVID has had an effect on, the pandemic's had an effect on the use of cash.
Yeah, absolutely. And we have to distinguish between cash as a store value, so what we have just seen, and cash as a mean of payment. And you're absolutely right. Cash has been losing ground as a payment method over the past year, and there is a clear shift towards digital cashless economy. And this trend was clearly accelerated by the COVID-19. So if we look at some data, in the US, for example, the number of cashless businesses jumped from 6% in February to 23% in April, and then stabilized around 13%. And in the UK, that's even more. The number of sellers using only digital payments jumped in 6 months from 8% in February to 50% in April. And by August, the number of businesses with digital-only payment system had stabilized at about a third. So this is a remarkable overall increase in the adoption of digital payments.
But we're seeing some important differences between the countries. Australia, for example, once they'd stabilized, the use of cash started to increase. Is there any reason why that is?
Yeah, actually, it happens in most economy. So just after the very hard lockdown in March, the number of cashless business has surged. And then if you look at, basically, we found that the number of cashless business decreased slightly because the lockdown stopped at some point during the summer. And then we had another lockdown, basically. And it's exactly the same trend for the UK. You can look at the September, October, November, December trend, and it has also increased again in November and December in the UK.
That's interesting. Has Sweden, which is a very low user of cash, where regardless of them not being used as payments, friends of mine certainly hold loads of krona outside of the banking system. How does Sweden react here?
Yeah, actually, we need to distinguish between the short-term trend and the long-term trend in the case of Sweden. And in Sweden, this is a specific case, I would say, because cash in circulation is very low and now represents only 1% of GDP. And the country is actually planning to become the world's first cashless society, probably in 2023. So there is definitely a long-term trend in becoming cashless society. And Sweden has been developing alternatives to cash since 2012. And the first alternative was a mobile payment system called Swish, a mobile app. And more recently, in February 2020, Sweden revealed that it had started its first trial of the digital krona project, the e-krona. And the government plans to implement the digital currencies for the country in probably 2021 or 2022.
And they're not the only ones, are they? There are loads of other countries.
Absolutely. Actually, over the past 2 years, worldwide central banks and governments have multiplied and sped up their digital cash initiatives. And in a survey by the Bank of International Settlements that was published last January, they showed that around 86% of central banks are developing, researching, piloting a CBDC. And the work goes far beyond research, since they estimated that around 10% of central banks, mostly in emerging economies, are already running pilot projects.
But China's got a live experiment, haven't they?
Absolutely. Yeah, they are actually leading the race. And research on digital currency in China started very early in 2014. And the main purpose of the Chinese digital currency is probably to replace paper money and to improve financial inclusion, which is another step in the development of China's digital economy. And first, we had the US-China trade war, and then the Facebook announcement, and more recently, the Chinese decision to destroy banknotes that had been circulating in high-risk areas for COVID-19. All these factors probably sped up the launch of the e-RMB. And in April last year, China began testing the e-RMB for payment in several major cities in China, and the government is expected to expand pilot programs at the venue for the 2022 Beijing Winter Olympics Games.
So what are the key features of central bank money, CBDCs?
So we have different key design features, and actually what we need to be very careful is like most central bank digital currency have different features, and most central banks are talking about slightly different features when they talk about the CBDC. And we have 3 different key features, I would say, in terms of issuance model. So the first model is like the 2-tier issuance model that we have usually, so the one that we currently have, where we have a commercial bank and we have a central bank, and commercial users are holding their account at the commercial bank, and the commercial bank is submitting reserve and the central bank is issuing money. So this is a traditional paper money issuance. then we could have two different issuance models. First one, users are holding their bank account at the central bank directly. So they deal directly with the central bank. And the second one is like users holding their bank account at the central bank, but it's still intermediated with a commercial.
Out of these three solutions, what proportion of the central banks will go for each one?
Most of central banks will favor the second model, the one which is intermediated by commercial bank, but where users are holding their bank account at the central bank directly.
Wow.
Assuming they are planning to release a CBDC, because it's quite uncertain for most economies.
So what's the ultimate aim then of the central banks getting into digital money? What are they trying to do?
So there are different motivations to issue a general purpose CBDC, and some central banks are motivated to increase financial stability. Sometimes it's because they want to improve monetary policy implementation. Some of them have mentioned financial inclusion. This is the case, for example, for the PBOC in China. Some of them, it's for payment efficiencies to increase domestic and cross-border payment, and sometimes as well for payment securities. And if we look at among advanced economies, I would say that the primary motivations for developing a CBDC is to improve payment security. And if we look at emerging economies, generally, they have a wider array of motivations, and especially when a CBDC is designed to complement or substitute cash.
This is interesting but scary. So what are the opportunities and the challenges presented by CBDCs?
So the first one is to provide a cash alternative, since, as we saw previously, cash as a mean of payment has been declining, and the pandemic has probably sped up the trend by 4 or 5 years. So this was the first one. The second one is promoting financial inclusion. So we have around 1.7 billion inhabitants worldwide who are lacking bank accounts. So it will probably be easier. And third one, probably it would be great for competition with other private currencies. Many private companies are planning to launch a digital currency. I'm referring, for example, to Facebook, which is planning to launch Libra Gem soon. Fourth one, modernizing payment for a digital economy, and could also improve efficiency and cost reduction, especially for cross-border payment. And you can see it as an opportunity or not, but can help to link payments to identity. And the last one probably could help as well to enhance international currency status. And that's probably also one of the opportunity for the yuan in China.
There's another opportunity, which is making intelligent cash, where you can build into payment message that if this happens, then something else happens, like paying your VAT and so on. Is there much focus on that?
Yeah, that's a good reason. So actually, the main difference between cash and CBDC, and that's why it's not the same, I would say it's CBDC by definition is a digital currency, and you have a footprint. So officially, the government could be able to trace individual behavior. I'm not stating that they are going to do that, but they could do, since nearly everything is traceable, since it leaves a digital footprint. So yes, we know that most cash in circulation in the US, for example, is held outside the US. So this is not used on a day-to-day basis. So if you have a digital cash, you could trace all the transactions. So it could be a nice way to tackle all the issues that we have with cash, trafficking, tax evasion, and so on.
Cash losing its anonymity is not something that's going to happen very soon. Okay, let's look at the challenges of the central bank's digital currencies work. Why is lack of adoption a problem?
the lack of adoption, because we don't really know how people and consumers are going to adopt it. We know that actually people in most advanced economies, and I'm referring to the US, to Germany, to Japan, we like cash, and we like paying cash. We love that the fact that cash is also anonymous, so it's not traced, and we are unsure how people are going to adopt it. And what is probably sure is, like, for example, in China, people are used to pay digitally. So more than 600 million Chinese use WeChat and Alipay on a daily basis. And the digital RMB on people's smartphone will likely win rapid and widespread acceptance in China. In Europe, or in the US or in Japan, it's slightly different because we have an older demographics. So people, the millennials, are more likely to use their smartphone to pay, to use like a digital mean of payment, while more senior people are less likely to use digital wallet and are more likely to continue to use cash on a daily basis.
The operational and security risks are well understood, I think, but what's disintermediation?
So disintermediation, we are back to our previous slide and what I was referring with the two-tier system issuance. And as I mentioned, I mean, this is very unlikely that consumers will be directly dealing with the central bank, but we don't know yet since most CBDCs are not yet functioning. So it's unlikely, but it's possible as well. And immature technology. So here we know a lot about CBDC, but we also don't know a lot in terms of technology. So what we know is like the technology used currently by central banks is very mature, works very well. There are very few cyber attacks, but when we use a new technology, we are unsure about what's going to happen. And actually, most central banks have already mentioned that for a CBDC, they won't use the blockchain technology, but they still need to figure out which kind of technology they will use exactly.
It's quite a scary future. So if we bring it all together and say, out of this discussion, what would be your single takeaway for a corporate treasurer? What's the single most important thing you need to take away?
So I would say that cash is unlikely to disappear anytime soon, but digital currencies will become mainstream sooner rather than later.
My takeaway is that people are not going to lose the anonymity of cash. That's got to be somehow taken care of. Thank you very much. That was really useful. Thank you.
Thank you very much, Jack.